Mark Hamrick is the Bankrate.com senior economist. He joins us, as well as Matt Cheslock at the New York Stock Exchange. Mark, let's go to you first. Okay, we lost 33,000 jobs. That was a bit of a jolt when we saw that. But put in context, we know that the storms Harvey and Irma had a huge impact. Most of the jobs lost were in the hospitality sector. And when you look beneath the headline, there was actually some encouraging signs, right?
Well, absolutely, and I think you basically have to look right past that payrolls number to have some confidence that the underlying trends in the U.S. economy are relatively strong. When we hear that essentially 100,000 plus workers were not at bars and restaurants, we know they were sidelined because of the hurricanes and flooding. So attention then necessarily does divert then to the unemployment rate, the lowest since 2001. And then ultimately the takeaway question that we really need to continue to ask is that wage growth, average hourly earnings up 2.9% year over year. Can that be sustained, or does that reflect the fact that we had all the hospitality, food and restaurant workers sidelined, and that's a temporary impact? That's something we'll be watching next time.
But overall, Mark, before I get to Matt, very quickly a follow-up, Mark, the economy generally is showing signs of improvement. Manufacturing expanding, service sector expanding, confidence among consumers and small business also encouraging. All of this pointing in the right direction. And if we can get the president's growth agenda in place, at least in some form or fashion, surely that's good news for the markets.
Well, let's talk about the economy and the markets in separate contexts, because they're not always related. But in terms of the overall direction of the economy, I think we're definitely on track for the possibility, if not the likelihood, of a rate increase in December, courtesy of Santa Claus, i.e. the Federal Reserve.
Yes, who's been giving generously for a number of years. All right, let's go to Matt at the New York Stock Exchange. Matt, I mean, listen, we find out that the economy, we lost 33,000 jobs last month. To me, that could have been a bit of shock for the market, but it took it in its stride. We're just down slightly today. But this is a market, it appears to me, that has a lot of belief in the economy and the belief that if the president can get those tax cuts through at least and deregulation, we can take it to the next level.
Yeah, we've had a lot of positives from D.C., but we've had really no action. And we need to see that start happening before this market really trends to take another level higher. We're going to start getting third quarter numbers out next week, and that's going to be very important. It's going to be very telling because the market has nothing else to trade on until December's rate hikes. So let's take this jobs number as a one-off event. We all anticipated it, except the analysts. I guess they were still looking for a job gain. We didn't get that, but all the other numbers were pretty good, and it's pretty indicative of what the Fed's looking to do.
All right, we're already out of time, but Mark and Matt, thank you so much for taking the time to stick around with us and share your comments. We appreciate it.